Good morning, everybody. This is the live market open for Wednesday, November 11th. I'm Yohay, Elam of Forex Crunch and Market Movers, doing the show for FX Street as usual. As always, we welcome your questions. We'll talk about recent developments, charts and levels, the next 24 hours, and your questions, of course. If you can't see the chart below the video, please go to tlk.io/fxstreet-forex-live-video. Okay, we don't have too many news events in the past 24 hours or so, but we did have markets moving. We had the dollar extending its moves to new highs and then retreating quite a bit. That was the main feature that we've seen yesterday. We'll cover, of course, all the charts. Regarding what's going on in the Eurozone, we had the Portuguese government falling. It's a center-right government, which the center-right party won an outright, came out as the biggest party, but didn't have an outright absolute majority. And eventually the left-wing parties toppled it. And now we have an anti-austerity government in Portugal. Let's see how that pans out. We have worries about Japan being in recession. The recent Tankan survey showed lower manufacturing, and we have official GDP numbers next week. So some news there. Apart from that, we learned that Chinese industrial output rose less than expected, 5.6%. It's not as good as people expected, but many market participants are now in this tin hat mode when they're expecting bad news from China. We've seen Aussie dollar fall and stabilize. Import prices in the United States fell. No big surprise there. It's mostly energy prices. And the RBNZ is worried about house prices in Auckland, which are too high, and milk prices, which are too low, but not about the exchange rate. I mean, at least they didn't talk about the exchange rate, so we have some stability over there, because we're used to having the RBNZ talk about the exchange rate. Good morning, Fabian. Looking forward to your questions. Let's also, before we move to today's event, let's talk about the charts. So here we have Euro Dollar, currently at 107.50, more or less where it was yesterday when we had the show. But since then, we had a few developments. We did see the pair dive below 107.10, which I mentioned as support, and almost reached the next support line at 106.60. Okay, so it reached 106.70, and from there it made a nice bounce back to the previous range. Okay, so the news about Portugal weighed on the euro. General dollar strength also pushed the pair lower, but since then we had the dollar weakening once again and the pair bouncing off the lows. So current levels to watch are 106.60, 107.10, 108.10 was the previous line, but perhaps the high is 107.90, and above that we have 109, 110, 110. And the downside, we have under 106.60, we have 105.30, and of course the all-important super strong line of 104.60, okay, which was the 12-year low so far. And the pound, we also had it recover, even in a nicer manner. I mentioned yesterday that the fall in the pound was a bit exaggerated. Good morning, Rob. Good morning, everybody. Because, well, the Bank of England hit the pound quite hard by lowering forecasts for inflation, extending the target from 2 years to 3 years, sort of being much more dovish than expected, and I think they went a bit too far. Today we'll learn a bit more about the UK economy. We have a jobs report, which will show jobs and will show wages, which is the most important thing. So let's look at the charts because we have this event quite soon. So these are in the calendar, sorry. So we have here on the calendar, we have expectations for UK figures. The unemployment rate is expected to remain at 5.4%. It's a figure for September. The jobless claims, known in the UK's claimant count change, is expected to show a small rise of 1.5K after a rise of 4.6. We had the jobless claims falling very, very nicely for long months. Now it's stabilized. Nevertheless, the unemployment rate continues falling. And most importantly, we have average hourly earnings, These stood on a year-over-year rise of 3%, which is very nice, stronger than in the United States, where it finally rose above resistance to 2.5%. Now we're expecting an even higher gain of 3.2%. If you can see here the chart, we can see that we're currently in the highest level since, well, more or less 2010. So it's quite good news. We're expecting it to rise even further to 3.2%. Now, if we exclude bonuses, sort of the core wages, if you wish, then we also have a nice rise. We had so far to 2.8%. Also the highest levels since the recession, since 2009. These are year-over-year rises, okay? So they have less noise than month-over-month. And now it's expected to slide to 2.7, still nothing of a disaster. Of course, these are expectations. Let's see how it pans out. This is the most important thing to watch. Now, if wages continue rising in the UK at a fast clip, it means that the Bank of England has more reasons to raise rates and to be less dovish, okay? That could push the pound back up. Another figure to watch. Oh no, these are the four main figures here. We have later on as well, an hour later, Mark Carney talking. Okay, so that's an hour after these figures. Let's see if we have details about the speech. Anyway, yeah, I don't know details here, but he'll, yeah. So another event to watch out for the pound. I'm more bullish on the pound than on other currencies because I believe that the Bank of England will raise rates after the Fed. So this big recovery, I think, is justified. Levels to watch: 152, 153, then 153.60. On the downside, we have 115.10, and of course 150. Big line on the downside. The pound's recovery has been stronger than the euro. Let's jump to euro pound. So we had this rise, this bounce back up on euro pound because of the Bank of England last week. And then we're seeing it sort of grind back lower, 70.84, 70.40 support, of course, ahead of 70.20, ahead of 70, the round level. And then we have 69.40. On the top side, 72 is strong resistance, and before that, 71.40. Okay, so it's an important day for the pound. Let's move on to dollar yen. Also here we had dollar extending its gains yesterday. We reached the high, was sort of more or less stable, and then 123.40, and then we had the US dollar weakening, and the pair fell below 123, now stabilizing once again. 123.60 is resistance, 123 sort of a pivotal line in the range, 122 support, and further resistance at 124. I have a question from Jack Sawad. I'm not 100% convinced the Fed will hike the rates. I'm also not 100% convinced, but we have higher chances of that. Let's talk about that a bit later in the show. We had a few bullish comments from Fed members. That's why I think we have a better chance of seeing that happening. But let's cover a few more currency pairs. Dollar CAD. Yesterday we had the API, the American Petroleum, whatever I stands for, I can't remember now. Anyway, they showed another rise in inventories. Then we'll have, of course, crude oil inventories. So we'll have more data probably showing oil prices, that there's too much oil and oil could weaken. So I believe we have more upside chances in dollar CAD, a weaker Canadian dollar, currently close to support at 132.40, high resistance at 134.60, which is the 11-year high in the pair. There a question from Fabian: what happens to the pound, to the yen, sorry, if Japan goes into recession? If Japan goes into recession, we have a better chance of monetary stimulus from the Bank of Japan, from Kuroda, and also for fiscal stimulus from the government. We had that thing last year. So they had their chance to act back in October, and they didn't do anything. But there's so many BOJ meetings, they could still act and could still push dollar yen higher. The sky's the limit, of course. 125.90 was the high level this year. 125 is a line closely watched. Yeah, by the rumor, so the fact about the Fed. Yeah, we talked about that yesterday. I believe the Fed will hike despite, let's look at the chances today. Still more or less like we've seen them yesterday. I'll refresh the screen. 67% for a rate hike in December. Still not 100% convinced, not like we had 90% against the hike in October. I believe that because of the strong NFP, the relative bullishness of the Fed in October, and what we had from Evans and Rosengren after the NFP, that these doves sort of accepted the Fed going into a rate hike, it certainly raises the chances for me. And for me, it's not fully priced in that we'll have a rate hike. That's why I see a good chance of the dollar strengthening even more towards December and rising a bit afterwards. In January, February, yes, we could see it by the rumor still the fact, but let's see how we have how will the figures be later this week. Okay, today in the United States and Canada, it's Armistice Day. It's November 11th. This day in 1918 at 11 o'clock, World War I ended. So it's Remembrance Day. In some countries, it's a holiday. In some countries, it isn't. So it means a bit lower liquidity today in markets. And that means that we could have either hours of boredom or we could have mad moves because of lack of liquidity. We do have some events today. We'll cover them shortly. Let's just finish up with more currencies. Just follow up on the question, what if December NFP is under 170K? Well, that, of course, casts doubts about the Fed hike. But I believe that currently we'll need a really big disaster for the Fed not to hike. Everything that they're saying leads to more and more conviction that they'll hike, and they'll need a real disaster for them not to hike. But let's see, we have retail sales on Friday, which is critical. The next big thing for the US dollar. So Australian dollar, we had weaker figures from China once again. Third time this week, we had weaker CPI. We had weaker trade balance. Now we had weaker industrial output, which was not such a disaster this time. So we have Aussie dollar struggling with 70.65 and support. We had the pair getting closer to 70 yesterday. Still managed to hold there. So apart from 70, the round number, we have support at 69.35, which was double bottom in October. And then we have resistance at 71.10 and 72. Okay. Tomorrow we have, later tonight we have employment figures in Australia. Let's talk about that just a bit. Jump to Australia right here. So the key figure to watch is employment change, which is right here. So we're expecting, after a loss of 5K jobs last month, Australia is expected to show a gain of 15,000 jobs this time. It's for the month of October. And if we have a gain in jobs, it could be positive for the Aussie, help it bounce off 70 and perhaps return to the high ranges of 71.10, 72. If we have a bad figure, another loss of jobs, you could see the pair perhaps a break below the support line of 70. Okay, it's also important to watch the composition. How much of the job gains are part-time employment? For instance, last time was lots of part-time jobs were gained, but full-time jobs were weak, were a side drop, bigger than the initial number, so the jobs report was even worse than the headline, okay? It's also important to watch the unemployment rate. Currently stands in Australia at 6.2%, and no change is expected over there. All in all, we're seeing a trend of rising unemployment, mostly because of less demand for mining, but the economy is doing okay in Australia. Okay, participation rate also not as important as in the United States, but still worth watching. 64.9 was the latest figure, so that's a big event for those of you trading the Aussie. Okay, and last but not least in our brief, the Kiwi dollar. Yesterday we had the financial stability report from the RBNZ. As I said earlier, no mention of the exchange rate, and for the Kiwi, this is No news is good news. We had the pair stabilize above 65 and even rise to make this kind of false break above 65.60, currently a bit below this level. Let's see what's going on over there. So these are the main currency pairs. Looking forward to your questions about more currency pairs, more fundamentals, and we'll cover the events for the day. So, as I mentioned before, it's a bank holiday in the United States and in Canada. That means the US session can be very boring, but if we have some kind of breaking news from various places in the world, we could have action regarding, we could have sort of wild moves on thin liquidity. At 9:30 GMT, the UK employment data, we talked about that. I believe it can show that the UK economy is doing better than the Bank of England recently said. At 1:15 GMT, also in London, it's Armistice Day in the UK as well. Remembrance Day, but UK markets are open. We have Mario Draghi from the ECB from Frankfurt coming all the way to London to speak in a panel. He'll be talking about monetary policy, I hope, and let's see if he talks about the need for more action, and let's see if he talks down the euro. He did that quite a few times, but and there's been a lively discussion in the ECB. Not everyone agrees that there's need for more action. Anyway, the euro dollar is sort of in the middle of the range, ready to go both ways. So if Draghi doesn't provide more news, or if he's a bit more upbeat on the economy, remember we have GDP figures later this week on Friday in Germany, France, Italy, and the whole Eurozone. Perhaps we'll see the pair move higher. So we have resistance here at 108.10. But if he talks about the need to act, need to fight deflation, we could have another challenge, return to the lower range, which is supported by 106.60 and perhaps even lower. So Mario Draghi, talking at the beginning of the US session, when liquidity is not as high as normal in these hours, just as the US comes in, that could really impact euro dollar. I'm not sure about the direction. In general, the direction for euro dollar is down. Many people are talking about parity once again, but I'm not sure he'll go that way. Let's see what he does. I think it's 50-50. Anyway, he always moves markets, and on thin liquidity, I believe we can have chances for action. Then, as I mentioned, Australian employment data in the night. Okay, so that's a big market mover for Aussie dollar. So once again, the euro and the Aussie, the more vulnerable currencies, are in action, but this time also the pound is in action, is in focus as well. Okay, so that's sort of the big event for the day. All in all, not too many events today because it's a Remembrance Day, but certainly this is what's going on. It doesn't mean markets can't move. Later this week, we have, of course, mentioned the Australian employment data. Tomorrow, we have both Draghi speaking twice in a testimony and Janet Yellen of the Fed speaking. So this promises lots and lots of action tomorrow. Okay, so I believe we'll have more stuff, much more, busier markets tomorrow. And on Friday, we have I mentioned Eurozone GDP, US retail sales, and also US consumer sentiment, which is supposed to give us a hint about retail sales, future retail sales. Not always correlated, but as US consumption is critical for the economy, I think it has a lot of impact as well. Okay, any more questions? Perhaps we'll dive a bit more in depth about the Federal Reserve. Yeah, let's talk a bit more about the Federal Reserve. Let's go back in the time machine, well, not so far in the past. Just 2 weeks ago, it was on October 28th, we had the Fed decision. It was a decision without a press conference, without new forecasts. They acknowledged that the rise in employment has slowed down, but that the slack is still diminishing. Okay, that there are less and less jobless, and that the US economy is inching closer to full employment. Okay, so that was one thing. The second thing that the Fed talked about, they did acknowledge that inflation is not going anywhere fast in the near term and that energy prices are still weighing. But once again, they talked about for the medium term, for the future, everything seemed relatively stable. Okay. Third thing, they were less worried about global markets, financial markets. So yes, China is an issue. We know that. Europe is the sick man of the world, if you want it. But they weren't too worried. And last thing, they gave us a clear hint about December. They want to hike. They really want to hike in December. They said that towards the next meeting, they will consider quite a few factors in regard to the rates. It's the first time they used the phrase "the next meeting," talking about December. Okay, and this was, of course, this tilted the chances of a Fed hike for December from around, I think it was around 60% against to 50-50. That was the first important event. 1 week later, we had the non-farm payrolls. Non-farm payrolls, let's put it on the screen perhaps. Let's see if I have the numbers here. Yeah. So the non-farm payrolls showed a gain of 271,000 jobs, which was far better than 180 expected. It also showed, more importantly, even wages. Wages went up 0.4% month over month. And finally, we had this range. We had this year-over-year range of 1.9 to 2.3%. That's what I call resistance in wages, 2.3, and it broke higher to 2.5%. That's a very significant development. It can be seen as a one-off, of course, and things can change, but we finally had it. Then we had the real unemployment rate falling to the lowest level in 5.5 years, 9.8%. This includes discouraged people or people that are working involuntarily in part-time jobs. Okay, people that want a full-time job but just cannot get it. Okay, so this fell again. All these figures were positive, but that's not it. What I wanted to emphasize is that yes, we had a stronger dollar because of this non-farm payrolls report. We have now higher chances of a Fed rate hike. It's now 67% and not 50-50 or 56 or whatever it was before. But more important thing, and I think this isn't priced in the value of the dollar and in the chances for a rate hike, is that two Fed doves. One is Charlie Evans of the Chicago Fed, which always talks about only late in 2016 and there's more slack, we should support the economy. A very consistent line this guy has, and he said he seemed resigned. He seemed willing to accept a rate hike. He said the conditions may be ripe and things like that. It's the first time we've heard this dovish member. If you want, the doves began crying. He began acknowledging the change, and I believe this is very significant. Another member, the president of the Boston Fed, Eric Rosengren, he also made similar comments. He never was a very, very heavy dove like Evans, but he was certainly in the dovish camp, no doubt about that. And he also made comments like that. Okay. Tomorrow we'll hear from Elam. Janet Yellen will be speaking, and I believe that she'll relate to this event, to the NFP, relate to the Fed hike. I believe that when come December, about around 1 week or 2 weeks before the event, markets will have a clear idea if the Fed is really going to hike or not. I believe the answer is yes, because data is improving. And I believe that the answer is yes, because they want to get over with uncertainty. And that the US economy can suffer another rise in the US dollar. Yes, back in December, they did complain about a stronger dollar, but they seem to accept it. The economy is doing okay. And well, I see more reasons to hike than not, but let's see. Everything is data dependent. If we have a terrible retail sales report on Friday, when there's new data, we can change our minds, right? So that's about the Fed. Okay. Have more questions? Let's talk about more charts, perhaps. Dollar Swiss. Thanks to a strong NFP and perhaps some Swiss National Bank intervention, we had the pair break above parity. The high we've seen is we got closer to 101. Support is of course at the parity line. Further support at 99.50. Remember, intervention by the S&B makes any Swiss pair not so attractive. Euro Swiss around 108, just under this level, support at 107.50 or 107.60, resistance at 108.40. Okay. Also, this Swiss National Bank likes to intervene in this specific currency pair. Euro Pound, we mentioned this before, stabilizing here at 70, under 71, 71.40 is resistance. Support is at 70.20, just above 70, and then we have 69.40. Euro Yen, very nice range trading, no? 131.50 to 133.15, which was previous support. So, very nice technical behavior for this pair. Currently lower in the range. Both central banks in Europe and in Japan are sort of more leaning towards easing. The Bank of Japan a bit less. They had their big chance in October and they didn't take it. And the ECB, the European Central Bank, is keen on easing on December 3rd. Pound yen, quite a messy pair, quite a messy cross. We had this big break. We got very close to high resistance here at 188.10. It didn't quite make it, and we fell down. You can see it is a higher low. Is a lower high, and perhaps another fall. But let's see what goes on in the UK. This is a big event, and we have a question, about the UK from Simon. Good morning, Simon. How is deflation in the UK affecting the GBP, and BOE's policy? Well, of course, the pound, the Bank of England has one clear mandate. The mandate is inflation. The mandate is 2% inflation, and it has this range of 1% to 3%. If inflation is out of this range, the governor of the Bank of England has to write a letter to the Chancellor of the Exchequer, an open letter, explaining why this is the case and what the Bank of England is doing against this. So this is the only mandate they have. So when the Bank of England decided, when they published a report last week, the quarterly inflation report, which comes out every 3 months, of course, in November, February, May, and August, when they lowered inflation forecasts, this sent markets a hint that the Bank of England will remain more dovish, is not ready to act, and this weighed, of course, on the pound. So there's a clear, central banks in general have a lot of impact, the biggest impact on currencies. And so we have inflation around 0. I think that when we have inflation figures, I think next week in the UK, and we'll learn more about that. We had also core inflation falling, retail price index RPI falling. So all these figures weigh on the pound. On the other hand, when we have rising wages in the UK, around 3%, and we'll know more about that quite soon, then, of course, when we have rising wages, we eventually have rising inflation. That's why I believe that the Bank of England went a bit too far with its dovish outlook about inflation. I believe the pound can recover. Okay, so that's an explanation. Fabian says, Yohay explanation about the Fed was very educational. Well, thanks. Perhaps you could do the same for each central banks in the following days, maybe one per day. Okay, that's a nice idea. Just talked about the Bank of England. That would be great for learning about each central bank policy and understand you better in your analysis. Okay, thanks for this suggestion. Well, we talked today about the Bank of England and the Fed. Maybe we'll talk about more in detail about the ECB tomorrow, as we have one speech from Draghi today and another one tomorrow. So that would be perhaps, but of course, if you wish to concentrate on another central bank, I'll be glad. Let's look at a bit more charts and waiting for more questions. Let's look at the price of oil. So we have oil in the lower range currently, 43.67. We had it move all the way to 48.30, still above support at 42.50. I believe that oil has more room to fall. We have OPEC meetings in a week and a half or so. These members are not really united. They're not really a cartel anymore. I mean, officially they are, but they're not acting as such. So, and also other producers are not keen on cutting production. So I believe the price of oil could fall a bit more. This, of course, could weigh on the Canadian dollar. Yesterday we talked about gold. We had gold, yeah, in the lower range, 1090, support at 1070. Let's see if we can have further falls or not. Dollar against S&P. I don't know how many of you are interested. Anyway, we're currently 2040 was support. Now the resistance 2120. We're seeing the pair sort of in the middle of this range, not going anywhere fast. Sorry, not the pair. It's the US main stock index. Let's go back to euro dollar. Well within the range, above the lows, but not going higher. We have Mario Draghi, of course, speaking later on. Do you have more questions? So maybe we'll talk about what we had in Portugal yesterday. Quite an interesting development. We had a question yesterday, I think, about Catalonia, and things are not totally unrelated. Okay, so we have what I call the autumn of discontent. We had the Athens Spring, Greece trying to change course, end austerity, try to get out of this deflation debt trap. Didn't succeed. It was crushed by the other European powers. Was humiliated and forced to accept an agreement that is practically unsustainable. Greece is currently in the back burner, but we have other countries with issues. So yesterday, I mentioned this, the former Portuguese government came out as the biggest party, the center-right party, but it didn't have an outright majority. Nevertheless, the president, coming from that same center-right party, decided to give the mandate for a new government to this center-right party. But in a rare occasion, the left-wing parties in the country, in Portugal, including the communists, decided to unite and toppled the government. Yesterday, the no confidence motion passed. And not only did they decide to topple the government, they decided to form a new government, and they have an anti-austerity plan. Now, we already have rating agencies aiming to, talking about threatening to cut Portugal's credit rating, and this could mean that Portugal could lose the support of the European Central Bank. No QE for Portugal. This didn't happen yet, but this is a threat. As we know, the ECB played a critical role in choking the Greek banking system. But Portugal may try to take a different course to defy the bureaucrats in Brussels. We had 2 days ago in Catalonia, here where I'm here in Barcelona, the parliament taking a first step towards independence. This is more about issues within Spain, about how you divide fiscal policy, about the language, about culture. But it's clear that these divisions became much stronger because of the economic crisis, because of austerity. So it's not directly related to austerity, but certainly there is a connection. So we're seeing this discontent growing in Europe. Currently, it's on the back burner, but we have elections in Spain on December 20th, and this could be the next time we have European crisis impacting the euro. We also have Greece still in discussions for the first tranche, the first review, and receiving more aid. Let's see how that goes. Currently also in the back burner, but these things are boiling. All the issues are unresolved, so we might have things going on there. Okay, so I see we have more questions. Jajayas is your Elias or your name, asking what time is Draghi's second speech tomorrow? I can't see it on the FX rate economic calendar. Let's take a look at the calendar. And let me tell you what time it is. Here's the FX rate calendar on Forex Crunch. We have, yeah, I don't see that. Let me take a look at another calendar. Maybe, yeah, you're right, it doesn't appear on the calendar. Let me take a look at other data they may have. I see Draghi speaking at 8:30 GMT tomorrow, testifying in Brussels, okay, in front of the monetary policy, on the Committee on Economic and Monetary Affairs in Brussels. And he's supposed to speak, of course, about monetary policy. But let's confirm that tomorrow. It's during the show. I'll keep you up to date on that, okay? And the question from Simon: how is data from China affecting the US dollar? Well, first of all, that data from China affects the Australian dollar more than any other currency, because Australia depends on China. China imports lots of Australian commodities. Regarding the Australian dollar, it does have an effect because we had Janet Yellen and other members mentioning emerging markets, but including China, as a source of global weakness. And one of the reasons to delay the September rate hike that never happened. So if we have a weaker China, this eventually means a weaker US dollar, assuming that the Fed will not hike. But currently it seems that China is stable enough and that it will not have an impact. If China, so weaker China, weaker dollar, stronger China, stronger dollar, but the link there is not always as direct as with the Australian dollar, because a weaker China, weaker Aussie is much clearer to see. A weaker China eventually has an impact on the US dollar, but not that strong. The US economy needs the Chinese economy and the other way around. They're very dependent on one another, okay? Yeah, that's the answer. You're welcome. Any more questions? We'll get to the wrap up for today. Perhaps I'll mention that let's take another look at the charts. Yeah, we're seeing dollar yen since the beginning of the show beginning to strengthen a bit more, getting back to range. Let's see if it's a wider trend of stronger US dollar. Yeah, also pound dollar is strengthening a bit, is weakening a bit. The US dollar is strengthening. The pound is facing in around 50 minutes the employment figures and most importantly wages. Euro dollar not moving that much. Yeah, well, not such big movements. It's still Remembrance Day. It's also a vacation, bank holiday in a few European countries. So liquidity is a bit lower than usual. Okay. Kiwi dollar also weakening, so maybe we can say no. Yeah, the dollar is a bit stronger during the show, but less so against the euro. Okay. Also have a slide here for Draghi. Just a quick reminder, we'll maybe talk about that more in detail tomorrow. In his last statement, he opened the door for extending QE beyond September 2016, perhaps expanding QE beyond 60 billion per month. According to recent rumors, this has a lower chance this time What has a bigger chance is a cut of the deposit rate from minus 20 basis points to minus 30, minus 40, minus 15. And he expressed a lot of worries. Let's see if he repeats that in his speech today about inflation, about the exchange rate, and gave us a big hint about vigilance. So we have more questions. Fabian says, if today's bank holiday in the US and Canada, what moves the US dollar? Only speeches? Is there something else? No, well, basically also speculation, also some breaking news, but nothing. We can't say, look, this is an event that's a US figure published at 3 GMT. Watch out for that, and that will move markets. I can't say anything like that. But we do have, of course, speeches, speculation, rumors. Draghi's speech just at the beginning of the US session is, of course, important for the euro. So that's where I see the bigger moves today. Okay. Alexei says, did you mean that weaker China than weaker USD, but not weak for the Aussie? No, weaker China directly means the weaker Australian dollar. That's clear to see. And the stronger China means stronger Australian dollar. Regarding the US dollar, we need a big weakening in China to have an impact on the US dollar. If China is really weak, that means that the Fed does not hike. And if the Fed does not hike, it's a weaker US dollar. But the impact is it's very remote. It's very indirect, okay? So I hope that answers the question. The impact on the Australian dollar is quite direct. Okay, so let's move to the wrap-up for today. This is the wrap-up for Wednesday, November 11th, Armistice Day, Remembrance Day. And we have seen the dollar making some retracement across the board. Euro dollar, for instance, returning into range despite the fall of the government in Portugal. Sorry. We have worries about Japan that may be in recession, perhaps more action from the Bank of Japan. It's unclear about that. Data so far, we had Chinese industrial output rising less than expected, only 5.6%. Australian dollar remains sort of depressed in range, still holding above 17. Import prices in the United States fell. RBN said not worried about the exchange rate, worried about other stuff, and that means a stable kiwi. Today's big event right now, soon after the show, we have employment data from the UK. And the most important thing to watch is wages. Let's see if they rise above 3%. Big event for today, perhaps the most important event, is a speech from ECB President Mario Draghi, 1:15 GMT, just at the wake of the US session, and this time the US and Canada are having a bank holiday. If Draghi says something important on weak liquidity, we could have a bigger impact. At night, we have the Australian employment data, very important, of course, for the Aussie. Okay, we're expecting an improvement in employment data over there. Okay, charts. Euro dollar well in range, 1.710 support, further support 106.60, resistance 108.10, and then 109. Pound dollar currently sliding in range, 151.11. Well, sorry, 151.10 support, 150 lower support, 150 to 153 resistance. I'm a bit optimistic for the pound. Dollar yen recovering from the fall, 123.60 is resistance, followed by 124, 122 low support. Dollar CAD currently 132.70 in the narrow range of 132.40 to 132.80. Strong resistance 134.60, low support 132. Aussie dollar, of course, 70. The 70 line is looming below. 70.65 still some kind of resistance, followed by 71.10. And the Kiwi dollar entrenched in range. 65 is support, 65.60 weak resistance, followed by 66.15. Okay, that's the wrap for today. I see we have more questions. Fabian says, but there are no banks to act, and the speech is right. Well, it's not a holiday like Christmas or Easter or something like that. It's a normal bank holiday. So some banks are operating. and we have banks in the UK, in Europe operating at least the beginning of the US session. So it's not that markets are closed. It's just much lower liquidity. So we do have just less action, but it doesn't mean no action. Okay, so I hope that answered the question. Sarap asks about pound CAD. Let's look about that like that. It's your favorite currency pair, I think. And yeah, we've seen that it's quite interesting. So it's above 2, the round number, 2, almost 201. Resistance 201, so we're almost there. Currently just below resistance. Support, well, the round number of 2 is sort of more psychological. Oh, it's also some kind of support. Further support, I see it right here at 199.10, and further resistance at 202.70. These are the lines I'm looking at. If we have a break above this level, if we have a good wage report, employment report in the UK, especially wages, you could see it break and head all the way towards 202.70. That's the next line to watch. If we have a weak report in 45 minutes or so, you could see it tumble back in within the range towards 2. So these are the levels I'm watching now at pound CAD. Okay, so thank you very much. That's it for today. Thank you very much for coming. I'm very glad to have all your questions. We'll be here tomorrow talking about what we had from Draghi and what we'll have from Draghi, and of course all the figures we had and everything. Tomorrow is a much busier day and more events. It doesn't mean that today with less events means less action. We're already seeing some movements and hopefully we'll see more. So I wish everybody a successful trading day and see you tomorrow. Thank you and bye-bye.